I love solar energy. I just want you to know that. And I love electric cars. But I got to ask you this question. I've been waiting to ask this. If electric cars are so swell, how come government has to pay people to drive them?
Hey guys, DJ Wonder Chrissy. Just a short video today. It's Friday. We're heading towards the weekend. It's almost here. You can taste it. Oh, it's about noon here in the Midwest, and I wanted to talk more about banks. And you'll notice when you see if you watch the financial websites and news, Yahoo Finance, stuff like that, you're seeing a lot of reports where banks interest income and profits are going down, and some of them very drastically. Some that come to mind are Truist and Capital One right now. Those are big banks. Those are really big banks. And the reason some of these banks, the reason why they're losing their profits is a nasty little game some of these banks like to play, okay? So first, the FDIC requires that you have deposits on hand in order to make loans, right? You got to have a certain percentage of deposits before you can make a loan. And this is a reason why you're going to see the housing market and the availability of cash kind of go down over the next couple of months. But anyway, so what a lot of these banks are doing, and it's hard to detect it unless, it's the symptom of this, that they're doing this is, one of the symptoms is lower profits. What they're doing is, in order to get those deposits on hand, they're borrowing deposits, right? There's a term called borrowing deposits. So if you have a very well-run, well-capitalized bank, they can make money by loaning money for a set period of time to another bank and charging exorbitant rates. It can be the Fed rate or sometimes greater. So that's what's happening with some of these banks, is in order to keep loaning, they're borrowing money from banks that have a little more capital than they do, and they're paying an exorbitant rate, which is driving down their profit margins and squeezing them tight. This is not a sustainable practice, right? Because at some point, that money has to go back to the bank that you borrowed it from. And then at that point, you've got a problem unless you've backfilled for that. And this is a reason why you got to be cautious about your banks. And, I'm seeing in the news now that some of these large banks are issuing profit margin warnings, which is a glaring signal that maybe they don't have as much stuff on deposit as they should. And it's not against these banks. Sometimes these banks like to do slightly illegal things, because if they get caught, the fines that they're going to pay are less than the benefit, right? So they know they're doing something just a little bit sketchy and a little bit wrong, but they're going to do it anyway, because by the time they get caught and they pay a couple of million or 10, 20, 30 million dollars in a fine to the FDIC, they've probably made billions off it. So, Wells Fargo comes to mind. That is their strategy, it appears. They are the most fined bank in U.S. history, folks. So there you go. Just a word to the wise. Be careful where you put your money. Just because it's a big bank doesn't mean it's a good bank. And, like I said, it's hard to tell when they're playing these tricks, because it's very, very hard to detect. And there you go. And this is a reason, too, why, I'm getting a good rate on my CDs, is because these banks, most of the banks that I'm seeing out on the Schwab CD exchange, are rated pretty poorly. If you want to find out how your bank is rated, go to weissratings.com. That's WEISS ratings.com. Put your bank name in there, your credit union, and it'll tell you how they rate it. And Weiss Ratings, during the 2008-2009 collapse, he called all the banks, all 500 and some banks that went belly up in 2000, 2008 and 9. He called them all. So he's got a good track record. Company's been in business for many years, and it's free. So there's no charge. I think they're getting ready to come out with their Q3 ratings. They've been crunching the data, and they're getting ready to put it out there. So check on your banks, see how good they are and where they fall down. That's all I have for today. I hope you guys are doing things great for the weekend and having a good time and being smart with your money, because that's the only way to be. DJ Wonder Chrissy, over and out.
Today, thanks to the quick action of my administration over the past few days, Americans can have confidence that the banking system is safe. Your deposits will be there when you need them. Small businesses across the country, the deposit accounts at these banks can breathe easier knowing they'll be able to pay their workers and pay their bills. And their hardworking employees can breathe easier as well. Last week, when we learned of the problems of the banks and the impact they could have on jobs of small businesses and banking system overall, I instructed my team to act quickly to protect these interests. They've done that. On Friday, the government regulator in charge, the FDIC, took control of Silicon Valley Bank's assets. And over the weekend, it took control of Signature Bank's assets. Treasury Secretary Yellen and a team of banking regulators have taken action, immediate action. And here are the highlights. First, all customers who had deposits in these banks can rest assured they'll be protected and they'll have access to their money as of today. That includes small businesses across the country that bank there and need to make payroll, pay their bills, and stay open for business. No losses will be, and this is an important point, no losses will be borne by the taxpayers. Let me repeat that. No losses will be borne by the taxpayers. Instead, the money will come from the fees that banks pay into the Deposit Insurance Fund.